thing. And, you know, when we look at this, I don't know if this makes a lot of sense yet. I mean, I know the graphics aren't exactly sexy, but, you know, it's still a visual. And it's the same basic setup idea of the max itself. Very, very simple, basic idea. It should be sharp and it should be easy to read whether you take the trade or not, okay? The rule, guess what the rule is? If the line's going up, you can buy it. If the line's going down, you can sell it. One rule caveat. You can't sell it if it goes below the zero. So in other words, we would have trades, and the trade setup would be to put in a sell at the high of the arrow. Okay, so you see the arrow forming. If it's a sell arrow, you're looking to sell the high of that candle. So we can already start to work through some of the trades. This sell is not valid. It's below the zero. This buy is not, this buy is valid. My mistake. This buy is valid, and that buy is valid. This sell is valid. This buy is valid. This buy is not valid. This sell is valid. This sell is valid. And this sell is borderline but valid. Everybody agree that that set of rules is pretty straightforward? So this is the S&P, and this is how these trades would have done today based on the max process. So if we look at this series of trades, let's just draw in the line. So that's not valid. This is valid, okay? So the first trade is a buy trade at the low of that red candle, okay? So you wait for the candle to come in, and you look to buy the low of that candle. In other words, you're buying this candle here, okay? This trade, you're looking to buy the low of that candle. Well, the next candle kind of touches the low, so you might have got lucky on the buy trade. And this trade is right on the line, so I'm not sure that we're going to be doing that. And it's the same trade anyway, so I don't think it's got any type of quality about it. And you can see those buy trades did pretty good. Nice little outcome. Let's take a look at this sell trade here. And obviously, we're going to be using the high of that candle to sell into. So we're going to be selling on the very next blue candle, quite clearly selling on the very next blue candle. Little drawdown against us, and then a massive swing lower. Brilliant trade. This buy trade, you can see that we've got a very big pin on it, right? It's a very big pin. That sell trade's irrelevant. So we've got a very big pin on this trade. So obviously it's going to be difficult to get that sell in, but probably you'd start working it on that candle. But you can see you did eventually actually get a test into that price there. So there's your buy trades. And that's a nice buy reversal, correct? So we went from a high price here of 10s down to a low price here of 93s. That's a pretty good trade, right? That's a pretty good outcome. Move on to the next trade. This buy trade is not valid. It still makes money, but it's not valid. It's above the zero, so it's not going to be a valid buy trade. Every one of these sell trades is valid. So we're going to be selling the high of that candle. Well, the high of the candle comes in on that sell trade there as well. So it's exactly this, basically exactly the same trade as that one. And then you can see that on this candle, we also get an arrow, which suggests we should also sell the high of that candle. So you may well have been able to do that trade twice if you were going to be doing a bit of business. So you can see that this is how this works. The buy trades did well, the sell trades did well, the buy trades did well, and the sell trades did well. The candle is validated at the candle close. If it's got an arrow there just now, it doesn't mean anything. The price is just being adjusted. But at the moment, you'd be looking at that saying, well, it could be a buy trade at the low of this candle. And you start recognizing that that could be a real thing. If you had those trades today, how would you have performed? Just into these swings, how would you have performed? Pretty good, right? So you'd have been able to take 8.25 up to about 11. That's about 3 points profit. So that's not a bad little start considering the time of the day. We had a couple of buy trades in here as well, by the way, just in case you want to take it back to the London Open. And if you think I was hiding anything from the London Open, I wasn't. There's your buy trade there, right? So there's your low of the candle there. So that's your buy trade. Yeah. This candle is at the zero, so none of these candles count. So there's your first trade of the London session right there. London Open, buy trade. 1.25, trades a high swing of 11, and that's a $500 profit on the first London session buy trade. These buy trades here, well, as I said, 8s traded about 11s, so about $150 per contract on those trades. This sell trade here went from 9s down to a low price of about 93s, 10s down to 93, so about 17, so about $850 profit per contract. The buy trade here at 93s traded a high swing of about 4s, so around about $500 approximately profit. And then this sell trade here at 2s traded a low price of 90s, that's about a $600 profit. Take those trades in total, and you've done not too shabby. $2,600 profit per contract. Now that's assuming you got the top tick price on your exit price, yeah? So assuming you got the top tick price on your exit, you can obviously start recognizing that that's a real thing. So when we see this, we start recognizing this as a real possible process to make money in real time. The shaded red and green columns are market maker cycles. So when we come into a green column, the market maker is now got the ability to sell to buyers. Okay, so when you see a green cycle coming in here, find the high of the price coming into the green cycle. You know market makers are sellers above that price. So if you saw a sell coming in there, you would know you're with the market maker. Like this, see this sell here? You're with this market maker. See how the market maker's coming in at the high prices here? So with the market maker coming in at the high prices here, you're now with the market maker seller here. And then you join in with the sell there. When it comes into this red zone, you're now with the market maker buyer. So the market maker is now getting long below that price. If the market maker is getting long below that price, there's your buy trade there to start joining in. See it? So you want to join in with the market maker at the bottom edge there, and that's your buy side pop. You see these green zones? That's the market maker starting to sell. So with the market maker starting to sell, that's the market maker short zone up here. And there's your sell trades there. Yeah. So when you look at that as a process, as a cycle process, you start recognizing the power of this potentially as a real money trade. So when you see that smoothing event, it's not actually that negative for you as a trader, is it? You can actually get past that idea of, having to rush into top edges and bottom edges. None of these trades are top edge or bottom edge trades. The bottom edge is in here before the buy comes in here. The top edge is in here before the sell comes in here. The top edge is in here before the sell comes in here. The top edge is in here. We never got a sell trade here. The bottom edge is in here before the buy trade comes in here. So based on that, we had 5 winning trades. 5 winning trades, $2,600 maximum profit per contract. The biggest drawdown we had, well, it was this sell trade here, wasn't it? This sell trade here was at 10s and it traded a high price of 11s. So we had a drawdown on that trade of about 4 or 5 ticks. It's not a bad drawdown, is it? It's not a bad drawdown to experience, 4 or 5 ticks. And obviously the idea is that you're not selling it immediately. You're going to be starting to still use your other qualities, the other trade entries that could have helped you. So you're not exactly selling as soon as that line touches. You're now investigating the opportunity to deal in and around those trade areas. And we talked about this being a buy trade in the background as well. So you're obviously going to be able to watch to see how that buy trade eventually developed. And you can see that the buy trade, we never got the arrow, which is a bit unfortunate because obviously we would now be buying this at 92.75 and it would have traded 96s. But you saw the arrow appearing in real time. So you saw the arrow flashing up in real time in here. So you might have decided to take the swing into that very strong buy side reversal candle in real time on a lower time frame, of course. That's something that you can then say, well, did it? Did it show up on a lower time frame? Could I have been involved in this on a lower time frame? Well, the answer is yes, absolutely. You could have been involved in that in a lower time frame story. Here it is here. So there's your time frame story coming in there. See it? The only downside is in a lower time frame, this goes back above the zero. So this makes that very, very difficult to now take advantage of as a lower time frame buy, because we'd already had that leg higher and it was quite a strong punch higher. So you're probably going to be a little bit more reluctant to buy too aggressively into that as part of that process on a lower time frame narrative. But 5-minute charts, I think, is the perfect time frame for this. It gives you a combination of swings. It gives you a combination of speed, time, and all the various other things that goes with it. And we've just seen that in today's market, $2,600 maximum profit, 5 out of 5 winning trades, and a very nice kind of smooth looking appeal to the shape and form of those max cycle reversals, the market maker cycle reversals. And obviously the other thing about that is you can obviously add in your value narratives. This is not including value. So when you add in your value narratives, you're then able to take a different look at it. You're able to look at the market from a value-centric point of view and say, no, I don't like it, or yes, I love it. I love it to death. It's going to be a brilliant trade for me. So remember, there's always the other aspects, just like the MACD system that we showed you earlier. There's always the other aspects of how aggressively do I deal? How often should I deal? Should I even deal at all? And that allows me to make far, far better trade suggestions. We know if we're going to get under a little bit of heat, or we know if we're not going to be put under a lot of heat. We know if we're going to have a lot of room to maneuver in and around these trade areas. So that's one of the important things, is how much room have I got to play in terms of like value narratives. So you can see that this actually precedes a value narrative. So if I now include a value narrative in this, you'll see for yourself exactly what happens. So here's a value narrative. This is just our NASDAQ S&P. You see the trades that you could have taken out of the thoughts? So you can see that the buy trade was perfectly valid here. This buy trade, probably not so good. This sell trade looks like, my God, if I don't sell 20,000 contracts here, I must be needing my head examined. This buy trade, yeah, it did diverge when it touched into this, but yeah, you'd be a little bit concerned about it. This sell trade, it came back round. It was diverging when we first came into it. It diverged a little bit and then it dropped. This buy trade, you'd have been chomping at the bit to get onto. And obviously, as a professional trader, you're obviously already long into this. Why? Because you've already taken that sweep liquidity and got long into this bottom edge anyway as a buyer on that bit of business, correct? You've already taken that buy trade as regardless of whether there was an arrow coming in, because you're not going to miss that type of trade. So you can see the processes that we're trying to bring into these thoughts. We're trying to give things that people can identify with through their education. So when we look at the education that we teach, the idea is that it's trying to line up with how it should look, the idea of how these trades should be executed. And if we can line that up, then it makes life a lot easier, because obviously when you're looking at an education class, you can see the reasoning behind these trade ideas as we develop out this as a process.